Hello friends, welcome back to another lecture. Now in this video we will look at Bollinger squeeze. Friends, by now I hope you can make out what a Bollinger squeeze is. This is in fact the second important feature after Bollinger bounds, because of which many traders wants to have Bollinger bands in their charts. So when Bollinger bands are narrowing or contracting, we call this as squeeze, and it's usually interpreted as a signal that a big market move, or we can say it's an indication of future market storm. Here's how the Bollinger squeeze looks like. Friends, after the squeeze, when Bollinger bands are expanding, we call this as a breakout, and it's usually interpreted as a signal that volatility has arrived and the big market move has started. Here's how a breakout in Bollinger bands looks like. As you can see here in this 15 minutes Divi's slab chart, after the Bollinger squeeze, big breakout happened, or we can say squeeze is just an indication of future storm. And so the stock or currency pair that is currently running into a Bollinger squeeze must be in your trading radar. Now a lot of new traders tends to look traditionally at Bollinger bands and make the general assumption that when the price hits the upper band, it's a sell signal, and when the price hits the lower band, it's a buy signal. Friends, this can be right and wrong at the same time. As we have seen in previous lectures that this works very well in sideways market along with RSI as confluence. But we have also seen in previous lectures that price can walk or stick to the upper or lower band during trending markets, as you can see in this chart of USD JPY. You can literally see the price is moving closely to upper band here and then to the lower band here for a long period of time. And thus many traders make the mistake of interpreting it as a buy signal. The best way to use Bollinger bands is in fact to combine it with other indicators, mainly RSI, and always base yourself on the price action to add confluences to the trading decisions that you take. That's why price action is king of technical analysis. Nothing speaks louder than psychological levels of support and resistance and how traders make decisions based on these levels of demand and supply. So when you see Bollinger bands performing a squeeze, it's usually a signal that large volatility is coming, or you need to simply wait or just stick to Bollinger band strategy during the sideways period. After this narrow squeeze is over, the breakout usually takes place, and that's the most effective use of Bollinger bands which comes into play. Friends, these breakout trades reap huge gains. But as we saw in the Bollinger bounce drawback, that these gains are low in percentage in that strategy. But while trading breakouts, we can ride the trend longer and get highly profitable trades. We will learn this breakout strategy in my Bollinger bands plus RSI 60 trading setup later in this course. This strategy in fact forms one of the 5 strategies that I will discuss in the course. So with this I wind up this video. I hope you are clear with Bollinger squeeze.